Guys, this is crazy. AMC stock could be well worth over $5,000. Meme stock market traders and apes are humbling hedge funds and big corporations. And a professional stock analyst slash reporter reports that retail investors are very good for the stock market and much more, guys. So make sure you watch the video to the very end so you don't miss out on any of this, because I don't think you guys want to. What's up, guys? Tezc here. A legal disclaimer before the video starts. I'm not a financial advisor in any way and only put in money you're willing to lose. But with that being said, make sure you guys subscribe and like. Let's get right into the video. So yeah, guys, as the year is coming to an end and just about to wrap up, on Reddit we have a post from APES, and he says, "Never forget about 2021, getting a nickname and hilarious memes. Importantly, as we talk directly with you on Twitter and via AMC Investors Connect, AMC and I are on the very forefront of the democratization of Wall Street. 10 years from now, all CEOs will tweet, 'Bless you all.'" We also have another Reddit post. "We need to put the numbers in perspective. This is just ridiculous. No need to dig any deeper. The truth always comes back to the surface. Merry Christmas, ape family." And this person is bullish. And this is what it says. "AMC trade over 3 times its available float this year. GameStop over 7 times sold. Fact." This is a fact. Put this in perspective. Apple traded 3/4 of its float. Microsoft traded 2/4 of its float. Google traded 1/4 of its float. These are among the biggest companies in the world. Their whole float has not even been traded once. We traded over 30 times. So yeah, when he said their whole float has not, I think he means has not. He must have forgot the H. But yeah, he means their whole float has not been even traded once. We've traded over 30 times that. Are they really trying to make us believe that there are not billions of synthetic shares out there when we are one of the strongest holding investors in the market? Merry Christmas and God bless you all. We get back to work after holidays. Hashtag I'm still holding. So yeah, guys, basically, if you didn't know, like I said, you should. If you didn't watch my playlist, I'm gonna have a playlist linked to the end of this video. AMC has a bunch of synthetic shares from large institutions, if I'm correct, like the Citadel, hedge funds, a lot of big institutions as retail investors, because we're individuals that invest our own money from our income and everything. These huge companies are manipulating the stock market with dark pools and synthetic shares, and they're trying to manipulate the price and everything. And I have another one that'll show you guys exactly what I'm talking about, so you'll have a clear understanding what this post from Jason is really talking about, because this is serious. But yeah, let's get right into it. And this is from the Weeble app, if I'm right. So here we go. We have a tweet from Twitter. "They might finally have something when it reaches 100. Apes are going to sell." And then this is another post from Reddit from a user called Wingman2900. "Fake squeeze or not, I won't sell until shorts are covered and closed. Please be reminded, $100, $300, $1,000, $5,000 are not short squeezes nor mother of all squeezes," right? Like I said, the MOAS is huge, and there's a lot of speculation that the MOAS is going to happen either in the beginning of January next year, or it could be happening at any moment, while the rest of December is going on. Anyway, it goes on to read quite some time. "A comment that contains 3 letters and defines a time for the MOAS." Like I said, if you don't know, the MOAS, mother of all short squeezes, namely before Christmas. Funnily enough, JP Morgan has now also commented on this and defined the same time period. It gives the following reasons for this. For short selling campaigns to be successful, positioning, liquidity, and often systematic amplifiers of the sell-off must be in play, which is true. We believe these conditions are not met, and therefore this market episode could end in a short squeeze and a cycle recovery throughout the year end in January. In a cycle recovery through year end in January. Retail resilience. He adds that there will be buying of stocks throughout the end of the month and quarter. Note that large short positions will likely need to be closed out ahead of seasonally strong January, right? Which is likely to see a small cap value and cycle rally. And as market liquidity declines, the impact of closing short positions could be greater than the impact of opening short positions. When liquidity conditions were better, Kalanovich, global head of Marco Quantitative and Derivatives Research at JP Morgan. Coincidence or fate? What do you think? We will see the MOAs before Christmas? Guys, comment down below. What do you think about all this? Will we see the MOAs before Christmas? Will we see it in January? Will we see it in the last few months of January? I feel like a lot of things are up in the air, so we can't really put our fingers on anything yet. But so far, it seems like a lot is going on. So make sure you guys drop a like, subscribe to the channel, and comment down below what you guys think about all of this news. The year when memes humbled hedge funds, because as you know, hedge funds and institutions are just, if I'm correct, really large hedge funds are basically, manipulating everything. The coronavirus pandemic has brought a new generation of investors to the stock market with rising interest in cryptocurrencies, non-fungible tokens, and obviously for those of you in layman's term, non-fungible tokens is what we call NFTs. That's the long version of NFTs. Anyway, ethical investors and more recently the metaverse. Yeah, with everything going on, it's kind of forced a lot of people, and I guess, I don't know what you would call them, I guess inventors and stuff, right, to make things more digital, right, since people are trying to adapt to the current situations of being locked in and all of that. But I think things are opening back up. So another area that proved popular with new retail traders in 2021 was meme stocks. As social media fueled trading led to wild swings in the market. Earlier this year, GameStop, GME, and AMC, among others, saw a dramatic surge in volume as Wall Street short sellers and Reddit Wall Street Bets users clashed, causing a short squeeze on the stock market. If you didn't know, Wall Street short sellers and everything, I'm pretty sure you guys are caught up with this, but if you're not caught up with this, long story short, Wall Street, the guys in the suits, decided to short GameStop to make it go bankrupt, if I'm correct, because nobody was selling it. But a lot of people, like I said, they have great memories when it comes to AMC and Wall Street. For some fathers and some kids, they might remember going to GameStop when they was younger and picking up a game or two, or maybe just one game or whatever. And so a lot of people believed in, the good old fashioned, keeping GameStop around. And so they had a clash, and they basically rose up against the suits and squeezed them into closing their positions. And that's why GameStop shot up to like $500 a share. This is what's gonna happen with AMC, just so you know. So that's what's going on. It's real soon, by the way. So if you're not in AMC, like I said at the beginning of this video, I'm not a financial advisor, but if you're not in AMC, I would say putting in just a little bit, maybe like $100, but don't put in like your last bits of savings. Only put in money, like I said, I'm not a financial advisor, but only put in money you're willing to lose. A short squeeze forces those who bet against the stock to buy in order to forestall bigger losses, sending the stock prices even higher. So yeah, basically when that happens, they have to close their positions, which is like they're betting against the stock is going to go down. But when the stock goes up, they have to buy, and then other people see that it does good. So basically, people that's not apes will look at it and be like, wow, AMC is doing good, so I should buy because it's going up and I don't want to miss out. And then other shorts that were like, well, they had a higher set limit that it might go even lower. It gets closer to their limit, and basically it's a repeating process, and that's what makes a gamma squeeze or a short squeeze or whatever the case may be. While retail investors are very good for the stock market, according to one researcher, but this one researcher isn't just some regular schmegular guy. He's a professional researcher.
This morning, really enjoyed the Karlsruhe Institute of Technology, and joined us now. Good to see you this morning. Really enjoyed your research. What was your conclusion? Has the retail investor been good for markets?
Yeah, thanks for having me here. I think retail investors are very good for markets. In academic literature, a long time ago, a lot of studies said they are uninformed, they are overconfident, but I think more recent research shows that they are informed in fact, and we actually deal with the idea that retail investors mitigate crash risks in stocks. And we saw that in times of the pandemic. We used that as an exogenous shock, so to have best practice research here and to make sure that our results are holding. And what we saw is that in times of stress, of turmoil, markets turmoil, we see that retail investors provide liquidity to institutional investors that are forced to sell, to do fire sales in this stressful situation. And by doing so, they actually decrease the crashes, the impact of crashes during the pandemic.
And Jan Oliver, as you said, this is contrary to sort of conventional wisdom here, right? That it's institutional investors that provide stability in the market. Were you surprised by the findings, and how were you able to tell the role that retail investors were playing here?
Yeah, so actually for me it was not so surprising with institutional investors because, as you know, regulation do force them to sell whenever there is a stressful situation, and we saw that in March 2020 very clearly that all institutional investors sold at the same time, driven by regulation and driven by withdrawals. There was a dry out in money markets. So actually this is called arbitrage capital that is missing. So even if there's arbitrage out there, so then retail investors can step in because they are self-financed and they get some checks from the governments. They got it directly, so they were able to step in and actually buy those very cheap stocks that were very cheap because of fire sales. And so that is actually some kind of explanation here, and that is more severe or stronger if we have this kind of liquidity shock driven by the pandemic.
As retail investors, we're doing our jobs, and we're the reason why a lot of these stocks are doing well. GameStop, Bed Bath & Beyond, as you guys saw over there on the side of the thing. So like I was saying, guys, we're doing really well. The MOAS is coming real soon. A lot of people predict that it's coming really, really soon. And all I can say is make sure you're around and subscribe to my YouTube channel if you guys don't ever want to miss out on potential videos that could make you millions of dollars, hundreds of thousands. And subscribe to the channel, leave a like, and check out my playlist on screen if you missed out any videos, because you don't want to miss out any information. Anyway, guys, take care.